Hey YouTube, this is Zach with Achilles Financial. Today we're going to be talking about one of my favorite trades that we've played very well this year in Gush. That is GUSH. It is the ticker symbol for the direction daily S&P oil and gas exposure and production bullish fund 2x exposure. So this is a leveraged equity, a leveraged fund, which means that if a oil price is going to move up, then you're going to see this fund move up doubly so. If oil and production shares are going to drop, you're going to see this drop doubly so. So that's why if you look into the portfolio, you can see some of the holdings in here. This is not all of them in the fund. This is simply just the top 10 holdings, but it is a very good indicator and one that we have been utilizing all year long. If you want to see how we talk about it and when I'm making those trades, that's available in the Discord down in the description below. It's free. It's just trying to build a community, and it is a ton of fun to be able to talk with all of you. So one of the reasons why I am building back into the oil trade at this point in time, I'll bring up the chart right here. The reason why I'm coming back into this, especially at this point in time, this is a fund that I've talked about a number of times this year. The oil market is something that I've talked about a number of times this year, but if you have not seen it at the pump at this point in time when you are getting gas, I am here to tell you that gas prices have gone up significantly, oil prices have gone up significantly, and we've actually seen a pretty substantial drop from where they were just 2 weeks ago, and that was by and large, we were expecting an increase in production from OPEC Plus, and that has occurred, that is delivered, and then we were expecting to see strategic releases or releases from the strategic oil reserves that we have here in the United States, and we saw that announcement happening today, so that's expected to be sent out over the course of the next 2 weeks. Keep in mind all of this downplay that we saw really over the past 2 weeks came from the fact that we expected to see this release, and that would put downward pressure on oil prices. However, we saw pretty minimal releases coming out of every country, namely being China, the United Kingdom, South Korea, Japan, India, and then the United States did release 50 million barrels, which is about 3 days supply. The United States uses about 18 million barrels of oil on a daily basis. And so the idea is that this would put downward pressure on oil prices. But what actually happened, as you can see from the daily chart today, is that oil prices went up. So at one point in time, they were up about 1.8%. And what that is causing, or the idea behind this, is that what happened is during the prior administration, they heavily increased the strategic oil reserves for the United States, and they did that when oil prices were very low. Now oil prices are relatively high. They're at some of their highest levels that we've seen since I believe it was 2018, so we're higher than we were in the 2018 time period. Not quite as high as what we may have seen in the 2014 time period, and especially 2008. So West Texas Intermediate, which is primarily what is priced here in the United States, whereas gas prices are primarily going to be more aligned with Brent crude, which comes primarily out from a UK trading block. But what you're going to see primarily from those is that West Texas Intermediate was above $85 per barrel earlier this month, whereas now it is about $78.50 at the time of making this video, which is about 8:30 on Tuesday night. So, and that's Eastern time. But so what I'm looking for here, you can see kind of this leveraged fund, and the reason I like to play this is because you can buy and hold, or you can play the options to see some of these upward momentum moves. What I am expecting is to see a longer bull market for oil. I've been calling for $100 oil prices for quite some time now. I expected it to happen by the end of summer due to a variety of factors, including a longer period of less travel associated with COVID. We did not necessarily see that. However, we're seeing travel come back in a booming way. Production from OPEC Plus has not returned to pre-pandemic levels, although they are increasing overall supply by 400,000 barrels a month until they hit that full pre-pandemic supply like they expect to do in the mid half or first half of next year. We're also seeing that the United States has dropped their supply significantly. And this is something that they have done. I can't imagine that this is done purely out of ignorance. I do believe that it is intentional, but the production capabilities have dropped significantly. So what we're going to be looking for going into next year is to use a fund like Gush to be able to get back into the 120s, into the 130s, and I think that it could get even higher. Be careful if you look at some of the longer time periods on this chart, where you can see that it was actually like in May of 2020 as high as $5,000. At that point in time, this was a much more highly leveraged fund. So be careful when you are looking at some of the longer term charts. That's one of the reasons why I showcase this. I am using the year-to-date capabilities versus some of the other ones. But what I'm going to be looking for, right now I'm playing a 103 to 104 spread. So I bought the 103. I then sold the 104 for a higher price than I purchased the 103. Both of those are available in the Discord where I post all of my trades. But you can see here that what I'm looking for is that upward move. If we go to a little bit more closely aligned look here, I'm looking for that move back to 120. I think if you buy and hold, the capability is there. However, there is going to be a lot of choppiness right here. I'm expecting we'll see some of this action where we're kind of hovering between the $75 to $85 range for the $100 to $105 range. And that is primarily going to be associated with the fact there's going to be a lot of jawboning in the oil industry. But all in all, there is a lot of fundamentals behind this trade in terms of oil prices and the commodities market in general, and what we're seeing with a higher dollar over the past 3 weeks, and oil is priced according to US dollars. So a stronger dollar means a better price for oil. Weaker dollar means higher oil prices. So there is a lot going on with this one, and I'm by no means saying that this is a for sure type of trade. Just from a macroeconomic perspective, I expect pre-pandemic travel to return, at least in part. I also believe that there's a ton of money, so we're going to continue to see new vehicles. We're going to continue to see travel from a driving perspective. Trucking is going to return. We have a dearth of truckers who are not currently pushing to be able to get back on the road. And as such, there is a lot of reasons why I think oil is going to continue higher, not just from the demand side, but from the supply side as well. And as such, that's why I am playing the short-term options right now. But I do think that this is a fun one to trade and to buy around the 100 to 105 range, especially because on the down days, gosh, it will get hit very hard, but something to look at in the 100 to 105 and look to sell in the 110 to 120. At least that's what I'm going to be looking to do. However, I'm by no means a financial advisor. I'm just some guy on YouTube giving you his opinion. And if you like that opinion or you find this type of content helpful, please leave a like and subscribe. It really encourages me to continue to put effort into the channel, and I really enjoy seeing it grow. So if you find this content helpful, let me know. Appreciate you all, and I'll talk to you later.